Okay, good afternoon, everyone. Thank you for joining us today for the introduction on Daiwa House Logistics Trust. So first up, maybe I'll just quickly introduce the panelists that we have with us today. It will be Mr. Jun Yamamura. Yamamura-san is the CEO of the manager of the REIT. Together with him will be Ms. Natalie Wong, who is the CFO of the manager. So the sequence today will be Yamamura-san will start with the presentation and will be followed by the Q&A. So for the Q&A, it will be via the pigeonhole. So if you have any question, please post your questions in the pigeonhole. So with that, I will hand over the time to Yamamura-san, who will bring us through the presentation. Yamamura-san, please.
Thank you. Thank you for joining the presentation of Daiwa House Logistics Trust. I will share an overview of DHLT as well as our recent 3Q business update. This is a summary of DHLT. DHLT focuses on logistics properties in Japan and Southeast Asia, where the sponsor has projects. Portfolio valuation in Singapore $852 million. DHLT holds a total of 18 logistics properties, 17 in Japan and 1 in Vietnam. All properties are developed by the sponsor, and the average age of the properties is at 6.9 years. DHLT has kept a high occupancy rate and relatively long WALE since IPO. Before sharing more details of DHLT, I think many of you are not so familiar with the sponsor, Daiwa House Industry. Firstly, let me share the origin of Daiwa House Industry. In the 1950s, Daiwa House started its business from one product. The first product, pipe house, is very simple but strong. In addition to that, it can be assembled together in just 3 hours. And also, the pipe house was produced in factory at low cost. Along with rapid growth of population, this product gained popularity. Since then, Daiwa has expanded its capabilities to commercial buildings, including logistics, and provided comprehensive turnkey solution to the customers. Now, under the philosophy is shared and succeeded. Daiwa has continued to provide temporary housing and relief supplies for evacuees of natural disasters. Today, Daiwa House Industry is one of the largest construction and development companies listed in Japan and conduct a wide range of property-related business globally. Regarding logistics spaces, Daiwa House is one of the top developers in Japan. Daiwa has committed to support DHLT's growth, including supplying new properties with attractive prices. Here are some features of DHLT portfolio. While most of DHLT properties are in Japan, geographically, 40% are in Greater Tokyo and 35% is Hokkaido, Tohoku region. And DHLT properties are diversified among sub-markets in the regions. Regarding land tenure, more than 90% is freehold or has tenure more than 40 years. Multi-tenanted property is 74%. Generally, in multi-tenanted property, we have chances to discuss rental uplift. Build-to-suit property has long leases tenure, and this contributes to income stability. One of the features of DHLT is green building. As a leading developer in Japan, Daiwa House maintains own building design standard much higher than government requirement. Upon expiry of DBJ Green Building Certificate, DHLT got BERS certificate for 13 of IPO properties. 9 out of 13 properties marked 6 stars, which are the highest grade in BERS. Adding to that, DHLT obtained a new BERS certification for D Project Cookie. DHLT strategically installed LED lighting to reduce energy consumption. As a result, 96% of portfolio is certified green. Let me go through 3Q results. In this renewal, we achieved rental uplift by 5% in weighted average. Many of tenants are satisfied with the properties and renewed with some uplift. In one property, we strategically replaced the tenant and realized 18% higher rent. Overall, we achieved 90% of renewal rate for FY 2024. Another example is the introduction of rent escalation clause to a PTS tenant with long lease tenant. While the situation is different by properties and tenants, we will strategically act for rental uplift and do our best to maintain high occupancy rate. In first half FY 2025, 7 leases, about 16% of NLA, will be expiring. We have started negotiations for renewal and leasing activities. Portfolio occupancy is kept at high 90% since IPO. Tenant communication is key to this. The asset management team, together with property manager, keeps good communication with tenants and conducts annual survey to maintain safe and comfortable use. Tenant satisfaction leads to high rate of renewal and contributes to overall occupancy rate. DHLT's lease is stabilized because more than 50% of leases will expire 2029 or later. Portfolio WALE is relatively long, 6.6 years. As mentioned earlier, high retention rate and proactive action are key to high occupancy. DHLT's tenants are highly credited companies. Sector proportion has been generally unchanged since listing in 2021. E-commerce and 3PL are growing sectors in logistics scene and occupy around 80% of DHLT portfolio. Our largest customer, Mitsubishi Shopping, is one of the largest Japanese food 3PL and uses spaces in 3 DHLT properties. We consider tenant concentration risk of Mitsubishi Shopping is very limited because each of location, distance, and end clients are different. Next, let me go through financial performance. In Japanese yen, both rental income and net property income grew 1.8% and 2.8% respectively from the same period last year. While there were some vacated spaces, acquisition of Ibaraki Yuki in March largely contributed. Despite the growth in Japanese yen basis, distributable income in Singapore dollar went down by 5.5%, mainly due to weaker Japanese yen. Japanese yen has dropped by 8% compared to the corresponding period in the previous year. The contribution of Tanduc to partially alleviated the impact from FX rate. DHLT's financial position is kept stable. Having said that, NAV is lower from end December 2023 because of weaker Japanese yen and cash distribution to unit holders. DHLT maintains healthy gearing and a high interest coverage ratio. DHLT agreed with existing lenders to refinance Japanese yen 10 billion of 3-year loan into 5-year fixed rate loan. This will help to mitigate interest rate volatility in the longer term. After this refinance, weighted average debt tenure will be 2.9 years, assuming the refinance was done on 30 September. DHLT is also planning to unsecure Japanese yen 36.5 billion loan in Japan. This change will provide flexibility in future financing. Here, I will talk about the growth strategy. DHLT was established to invest in Asia logistics property particularly in both Japan and ASEAN. This slide shows the growth of DHLT since IPO. In 2021, DHLT started with 14 of Japan properties. After IPO, DHLT added 3 high-quality properties and 1 underlying land in Japan. Then DHLT acquired the first property outside of Japan in July this year in Vietnam. One point to highlight is that in 2022, sponsor supported DHLT's growth by subscribing for units at a premium to fund the acquisition, demonstrating its strong commitment. In future growth, DHLT will continue to leverage on sponsors' pipeline and balance portfolio among Japan and ASEAN countries. Now, let me briefly mention the market outlook of Japan and Vietnam. Japanese logistics market is supported by strong demand. Japan is the third largest economy in the world, and overall demand is very stable, such as e-commerce, food, and manufacturing. Speaking of the supply side, new supply of logistics properties is forecasted to continue in some sub-markets in Greater Tokyo until 2025. However, surging construction costs will result in limiting supply thereafter. Materials such as imported wood and metal are affected by cheaper Japanese yen, and labor cost is also going up from labor shortage. Here is Vietnam outlook. In the first 9 months this year, foreign direct investment to Vietnam increased by 11.6% year over year. As you may know, Vietnam has 1 million population, and many global companies are located. Also, growing young middle class drives increase of consumption. While we need to be careful about the trend, economic expansion in long run can positively affect logistics spaces. Our property in Vietnam is on long lease and provides a stable income to DHLT. In summary, the financial performance was affected by effects which we cannot control. But you can see the operations are healthy, and we will continue to focus on the operation. While it is tough to foresee the future condition, manager will do our best in the management of DHLT, collaborating with the sponsor. Thank you for your attention and interest in DHLT.
Okay, thank you, Yamamura-san, for the presentation. We shall now move to the Q&A section of today's event. Once again, if you have any questions, please post your question via the Pigeonhole. Okay, maybe I will start by reading some of the questions. So for the first question, some of the assets have shorter land leases. Do you think there are any risks to this?
Yeah, so saying shorter, but still remaining tenure is long. And let me share our example for one cases. So we have the project ILMA from the IPO. And the IPO time, we hold as a leasehold property. But in 2022, we acquired underlying land. Then now it's a freehold property. Then this is one case to deal with the leasehold property. We can buy underlying land, and then so if we will continue the leasehold, we sponsor and ourselves keep good relationship with each of the landlord. Then we strategically or we discuss with landlord about the future plan. Then buying underlying land is one of our options.
Okay, thank you. Next question is on borrowing costs. Do you expect borrowing costs to increase? How much would this impact your Singapore dollar term distribution and EPU?
Thank you for the question. Yes, I think in terms of our loans, they are mainly they are all in yen, right? And they are all hedged when the loans were taken mainly at the IPO time, when the fixed rates at that time are very low, close, less than 0.1%. So now with the increase in a gradual increase of the yen interest rates, if you look at the yen hedged cost, if you look at the market hedge cost, say for a 5 year compared to what it was at the IPO time, it has increased by about 1% just purely on the hedge cost itself. So there will be an impact on the yen interest cost with this increase in the swap rates, right? But having said that, I think our portfolio is still very sound, as in our interest costs are still very low compared to the other currencies. So how much would this impact our distribution? So just to give some color, if for a 1% increase in the fixed cost, the impact is probably going to be about less than 3%. But as we mentioned in the recent business update, we want to take this opportunity to enhance our financial flexibility, because as we look ahead and build up our growth plans, to expand into the other countries, it's important to increase our financing options and also financing flexibility. So we will take this opportunity to actually unencumber our portfolio and enter into, or rather restructure into an unsecured loan facility, right? But all in all, we expect that the impact, even if it's on a full year basis, is going to be around the range of no more than 5%.
Okay, thank you, Natalie. Let's move on. Next question is on acquisition. So besides Vietnam, will you be considering other countries, and what countries will you be looking at?
Okay, so far we have pipeline properties in Vietnam, Indonesia, Malaysia. Then all three countries, daiwa has projects. Then we potentially analyzing each of the country. Then and we also talk about the price and the condition with our sponsor. But at this moment, we haven't decided which property we are buying next. But potentially, we are looking around 3 ASEAN countries and Japan property as well.
Okay, thank you. Okay, next on the upcoming non-renewal next year. So is the management confident of backfilling non-renewal leases, about 10% of NLA in 2025?
Yeah, so the biggest property is Sendai Port. So the existing tenant, which occupied 6%, decided to leave because the tenant has constructing their own logistic park. Then, but we already started the leasing, and now currently we are talking with the potential tenants about the condition and timing. Then, yeah, so I'm not so optimistic, but actually I think we can fill up the vacant space. Then, yeah, so like that, we try, we act in advance to seek potential new tenant and start discussion. That is our normal way against leasing.
Okay, thank you, Imamura-san. Moving on, Next question on hedging policy. With the yen Sing FX so volatile, can you remind us of your hedging policy?
Okay. Yes, so we do very disciplined hedging in order to mitigate our portfolio against the FX volatility. So on a systematic basis, we do monthly hedging and on a rolling 12 months forward basis. So that would help to average out any of the FX volatility and also to give us more certainty on the FX and avoid any significant FX exposure at any one point. Right. So I think that would be a prudent capital management to help to ensure stability for our distribution.
Okay, thank you. Okay, next on some rent escalations. Okay, you managed to get rent escalation for some leases in a traditionally fixed rent market. Do you expect the trend to change to have more rent escalation in future leases?
Okay, so yeah, as referred, yeah, so for long time, Japan market is fixed market, but we experienced rental uplift roughly 5% for this year. In the discussion with tenant understand the necessity of rent uplift. Then, but of course, it depends on the property by property. Then, yeah, we offer we change our offer to the tenant depends on the situation property tenant side we consider overall. Then regarding the BTS property, we have not so many chance to ask rent uplift because of the contract. But yeah, this year we have one timing to talk about the rent change in certain BTS property. Then yeah, we succeeded in introducing that. But again, so it depends on the property market tenant situation. Then we try to introduce rental escalation, but it depends. Looking around other J-REIT disclosure, yeah, other J-REIT is trying to introduce such contract, but it's I think it's not always. And adding to that, multi-tenanted properties normally contract term is 2 to 3 years. In such case, we don't include rental escalation, but we will negotiate every timing that lease is expired.
Okay, thank you. Okay, the next question is on the recent acquisition in Vietnam. Understand that the D project Tantuk 2 is financed in Japanese yen. What's the amount, interest rate, and the period of loan? So Dong to Sing has depreciated by 10% over the last 5 years. So please comment on any potential Vietnamese Dong exchange loss risk.
Okay, all right. Thank you for the question. Yes, we have taken a yen loan, or rather we have capitalized on our portfolio at the portfolio level to take a yen loan to finance this acquisition. So will you say that this is a currency mismatch? I think it depends on how you look at it because on a portfolio basis, we do have a very significant amount of yen assets, right? So we are leveraging on our the ability, to actually capitalize on our yen assets to source for these yen financing and achieve the most optimal financing cost and the most financing solution for this acquisition. So what is the interest rate, right, and the period of the loan? Now, for this yen loan, we have substantially hedged the loan amount. It's a 4-year yen loan, so substantially hedged. I think more than 99% has already been fixed in terms of the fixed rate. So I think that helps to mitigate any interest rate volatility. Then I think the related question is on the dong and the sing depreciation. Well, I think like I mentioned, the yen loan actually helps to achieve a capital hedge against the yen assets, right? So that actually serves as an additional capital management or capital hedge for the portfolio at the REIT level. Now, in terms of income, the income streams from the project, which are actually mainly in dong, well, yes, it has depreciated in the last 5 years, but I think in the last 1 year, actually, it has stabilized. And whether we have actually, how we strive to actually mitigate this dong exchange risk. I think 2 factors. As you know, the dong derivatives market is pretty nascent and not that developed. So I think in terms of hedging solutions are not so liquid and quite limited as well, right? Having said that, there are ways we try to mitigate this risk. For example, what we try to do is to structure regular repatriations of the dong back to Singapore, right? So with this regular repatriation, this would help to mitigate any of the dong movements because the regular part of the cash flows are regularly repatriated back to Singapore, right?
Okay, thank you, Natalie. Let's move on to the next questions. For logistics outside of Japan, do you hedge the currency risk? I believe this has been addressed by Natalie in the previous questions. Then we move on to the next questions. So far, has any tenant defaulted on rent? If so, please elaborate on this issue.
I'll take this question. No, so far, I think one of the strengths of our portfolio is actually the quality of the tenants. We have very, very prompt tenants who actually either pay on time or pay in advance. So even during the COVID time, we do not have any rent restructuring or any non-payments or any defaults in payments. So I think tenant quality is actually one of the key strengths of this portfolio.
Okay, thank you, Natalie. Okay, the next one on acquisition. So far, you have only acquired from the sponsor. Will you consider acquisition from third parties?
Yeah, so the daiwa house property quality and the tenant is our edge, but we don't focus on acquiring only from the sponsor. So we are open to third-party properties. Then so far, having said that, the sponsor provide us the pipeline assets, high quality and attractive price. So in many cases, sponsor offer us with discounted price. Then yeah, we can choose the better one among pipeline, and we need to compare third-party property and the sponsor property. So again, yeah, we are open to third-party properties, but we will choose new properties based on the yield and the quality of each of potential properties.
Thank you, Yamamura-san. Okay, moving on. Next question on management's fee. Is the manager's fee aligned with the interest of unit holders? I understand that the manager is paid fees for at each acquisition it makes, and will this incentivize acquisitions?
I'll take this question. Right. So I think at every acquisition, there is acquisition fees, which under the property fund guideline for if it is an interested party transaction, the acquisition fees have to be paid in units. So to date, our acquisitions have all been the interested party transactions, which are all acquisitions acquired from the sponsor. So as such, the acquisition fees have all been paid in units. Now, so I think that perhaps will help to achieve this alignment of interest, which is perhaps one of the reasons why it is stipulated as such in the property fund guideline by MAS. Yeah, so whether this will incentivize acquisitions, I think at the end of the day, the manager's objective definitely is to help to achieve, the growth for the portfolio, right? To achieve the best optimal result for unit holders. So the acquisition growth, what it is the most optimal growth plan and trajectory is of the topmost important consideration, right? So I think the fees is not the primarily driving factor of how the manager evaluates acquisition.
Okay, thank you. Let's move on. On the supply, so how will the significant supply of logistics space in Japan affect DHLT?
So it's so-called in Greater Tokyo, there are many new supplies coming up this year until next early first half of next year. But so far, we haven't affected new supply which is coming up near our existing properties. Then we think like this. So logistic property is we need to consider not as a whole Greater Tokyo, but we need to think of sub-market of our properties. Then in that sense, no new significant new supply in each of our sub-market. Then yeah, of course we are watching over the supply in Greater Tokyo, but new supply and in many cases huge size multi-tenanted property is concentrated on a certain area which is kind of far from our property. And so far, then it's okay to our property, and the reason our tenant move out from our property is not moving into new upcoming property, but there's another reason, like they build on logistics properties. But again, so far, yeah, that supply does not affect DHLT so much.
Okay, thank you, Yamamura-san. The next questions back to hedging. So I read that you hedge FX on an annual rolling basis. So gains from FX hedges decline as you renew your hedges. Since Sing Yen is stabilizing around 111 time now, how would this impact your DI and DPU in Sing dollar term?
Right. Yes. Yes. Thank you. Right. We definitely are hedging it on the discipline basis. So I think the hedges which are done continuously would therefore be executed in tandem with the market rates. But having said that, that definitely has helped to mitigate the FX exposure. Now let's take an example, like for even for 2024, right? Where if I compare on a year-on-year basis, the average exchange movement, right? Yen has actually depreciated. If I look at the average P&L rate, it's actually depreciated by about 9%, right? But the DPU is still drop is only at year to date is only less than 6%. So there is actually a significant contribution from the hedges. The other thing is, if I look at from IPO time until to date, yen has actually depreciated by more than 20+%, right? But our DPU, has actually been relatively stable. I mean, the drop of the DPU is definitely nothing close to the tune of that 20%. So we do see the benefit of this hedging, the benefit of the hedges, which helps to reduce the FX loss.
Okay, thank you, Natalie. Next on the acquisition question, do you plan to do more acquisition? With gearing of close to 40%, do you intend to fund using equity fundraising or Japanese yen loan rather? So EFR would dilute NAV at the current market price.
Okay, as I mentioned earlier, there is potential properties that sponsor provided to us with kind of discounted price. But yeah, so having said that, considering current unit price, NAV, etc., yeah, we need to very supportive about EFR. Then we are closely watching the market situation, and then I think yeah, still. Japanese yen loan is available, but yeah, so yeah, we are reaching to 40%, so we need to consider LTV as well. Then so at this moment, there are no concrete plan to do acquisition with EFR or debt financing, but we always analyzing acquisition opportunity.
Okay, thank you, Yamamura-san. The next one is what is the key differentiating factor that you have compared to your peers?
Okay, so the one is our ability to acquire property, high quality property with reasonable price. Then this is because Daiwa House is in Japan #1 logistics developer. Then also has properties in Asian countries with high yield one. Then that is one biggest differentiating point. Then another one is the Daiwa House also support us in the financing area. Then of course we borrow from Japanese lender, but the Japanese lender also our Daiwa House is a good company. And then Daiwa House also keeps roughly Daiwa House Group 13% of DHAT unit and invest in so 13%, and then in 2022, Daiwa House subscribed with premium price. So Daiwa House financially helps DHLT as well. That is the two biggest area of the differentiation with DHLT.
Okay, thank you, Yamamura-san. Moving on, so one of the peers had to undergo urgent mid-year revaluation and significantly revalue now its Japanese properties. So do you anticipate you need to do likewise in your coming valuation exercise?
Okay, so yeah, I understand the three properties impact has which devaluated. Then I think yeah, so that was the office in Greater Tokyo. Then our properties, logistics properties diversified in all over Japan. And then I think yeah, impact property in Makuhari is so market is very limited, and I think discount is kind of tough. But in our case, we can do the tenant so far. Then tenant itself is very good, and I don't think we cannot find successor tenant if our property is vacated. Then I don't expect such a serious situation to come to DHLT, but of course it's up to our daily operation. So our asset management team concentrate on do a good leasing activity and keep high occupancy with keeping good communication with the tenant.
Okay, next one is what is DHLT's challenges faced, and what is your growth plan and target?
So from the beginning, our midterm target of AUM is roughly 2 billion thing, in the midterm. But at this moment, after IPO, as you know, the equity fundraising opportunity was limited due to the market condition. Then, yeah, I said, as I said, we always keep preparing for the acquisition analysis, but the biggest challenge is so why is cheaper Japanese yen? Japanese yen depreciated more than 20% from IPO. Another one is soft equity market, including our unit price.
Okay, moving on to the next questions. So participants, if you have any further questions, please post your question through the pigeonhole. So will you consider providing recording of analyst briefing and Q&A for quarterly results and business update on your website? Okay, so for this question, thank you for this question. So we have been considering this, and we will continue to consider. Let us take this back internally and think about it. I mean, we do acknowledge that some of the practices out there have been providing the recording. But yeah, thank you. Okay, once again, if you have any further questions, please post your question through the pigeonhole. The QR code is on the screen right now, so you can scan and post any further questions that you have. Okay, so there's a question on Koriyama, who has occupancy rate of 67%. So what is the cost of action for this property?
Yeah, Korean property yeah. So since IPO, this is the only property which has a vacancy roughly 10 to 20%. So last year we achieved 100%, but after that this year a few tenants decided to move out or shrink the space. Then now we are working with the sponsor side. Sponsor has the branches in many cities in Tohoku area, and then also sponsor has broad connection with national 3PL companies. Then we are working with the sponsor to reach out more and more potential tenants for Korea. Anyways, this is we understand this is one of the most important issue for DHL's management. Then we will focus on the lease up for Korea.
Okay, thank you, Yamano-san. Okay, participants, once again, if you have any further questions, please enter your questions through the pigeonhole. Maybe we'll wait a couple of minutes more to see if there's any new questions that's being posed. I think there's a couple of participants who are typing in their questions. Let's just wait maybe a minute or so. Okay, there's a new question on the cost of borrowings. What is the cost of borrowing and whether any interest rate changes will impact the company?
Right, as we mentioned in our business update, our costs of borrowing is currently about 1.13% as at 30th of September. So as we are actually completing our refinancing and entering into a new fixed rate for the loans that are maturing, right? So like I mentioned, there will be interest rate increase, which may impact the results on a full year basis. Yeah, but for 2024, I think the impact is not material because it's the loans are only due in end of the year and end November.
Thank you. The next questions, do you foresee rate of distributable income and DPU is going to be stable in the future, and what will be the headwinds?
Okay, so maybe I'll just start off with this question. So yes, I think in terms of the headwinds, for us, which is very evidently is actually the yen, right? One of the yen, although we do have hedging in place for the yen, but yen has been depreciating, over the last 2 years. So there will be some impact, notwithstanding the hedges being entered into. But having said that, I think the impact is mitigated, right? So that actually will help to mitigate any drop, which is much reduced compared to the extent of the market rates. And the other thing is because we have a bigger portfolio of yen loans, a lot of the costs are also in yen terms. So the impact of the yen depreciation is also going to be mitigated with these costs in yen terms, right? So that also will help to mitigate the impact of the yen. The other factor I would like to also point out is actually the diversification that we have embarked on, where we actually completed our Vietnam acquisition. And this acquisition actually does have some rent escalation in the long lease. So that actually also helps to diversify, our geographically exposure as well as the currency risk. Right. The other point I would like to add on is, of course, there is also the positive impact, right? Because with the policies, with BOJ clearly reaffirming that they will be normalizing, their interest rates. Actually, the market do expect that the yen, should stabilize. There's a market expectation, and so I think that may be some positive outlook that's expected by the market, right? So I think that is also a positive for us. But most importantly, is fundamentally, if you look at our portfolio, it is a very resilient and stable portfolio. If you look at the results in yen, it has actually been showing a very positive growth trend, right? And also, we have also demonstrated, despite the headwinds in 2022, we have executed acquisitions with a strong sponsor support coming in to take in, to subscribe some of the units at NAV at that point. So that actually also helps, in the REIT in executing its growth plans despite the challenging market conditions.
Okay, thanks, Natalie. Okay, moving on. Next questions. Okay. So the new government is quite unstable. So this is quite a subjective view. Okay, so the main question is, what is the impact of the new government on yen, logistics market, as well as the interest rate, etc.?
Okay, firstly, we cannot control the politics. Then we are concentrating on the operation ourselves. But so that comment I agree with to some extent. Then, but we cannot tell the actual impact, what the actual impact is. But regardless of the governing party, the BOJ is trying to increase Japanese yen slightly. That maybe affects some to us. Then logistics market, I think regardless of change of the governing party, still demand itself is very stable. So in our business, I think it's a change of the parliament does not affect so much to us.
Okay, thank you, Yamamura-san. Okay, the next one is on borrowing cost. So what is the projected cost of borrowing for the next few years?
Right. I think as we mentioned earlier, we do plan to hedge some of these maturing hedges that may fall off with the refinancing of some of these loans. So I think in terms of the projected cost, having said that, we still expect the cost to be relatively benign. So I think maybe if I look at it from a full year basis, it also depends on, it's a bit difficult to call, but let me just give a sense or a range, right? I think we would put it, between, say, it may be between the range of less than 1.6 to 2% kind of level. Why? Because there may also be other growth plans that we have, right? So I think if you look at it, we do also have the additional loan that we have acquired for Vietnam. But all in all, we still expect that by next year, the interest cost will still be much lower than the 2% handle.
Okay, the next question is on our top tenant, Mitsubishi Shokuhin, who has a high contribution of 22%. If there is a default, what is the backup plan?
Okay. So firstly, so Mitsubishi Shokuhin is a very big company, and it's tough to imagine. But if the Mitsubishi default, of course, this affect to us. Then if so we need to, but we don't have any concern about re-tenanting if Mitsubishi leaves our property, because each of our property, actually they are located in three of our properties. The biggest one is the Kawasaki, but each of the property is located and very competitive within each of the sub-market. Then I think we can find the successor tenant. Then, so again, so Mitsubishi Shokuhin is very strong, but we can find, I believe we can find a successor because of our edge in quality and the location.
Yeah, let me also just chip in on the question. Right, I think first and foremost, I think as we mentioned, right, although Mitsubishi Shokuhin is our top tenant, it has a very diversified end user, right? So I think even with whatever issues that there is actually a diversified use, end user base. Right, that's one. And the second thing is also we do have security deposits with them. So if you are worried about the exposure in terms of the results, then we do have security deposits that would help to mitigate this. But I think with their strong credit financial strength, I think this it appears that the risk actually is quite limited. Yeah, and in terms of filling up this exposure, like I mentioned, because it is in a few locations, right? It's not in a single property, it's actually in a few locations. So I think that also helps in terms of managing the concentration risk.
Okay, thank you, Yamamura-san, Natalie. Okay. So I think we are on the hour. So with that, thank you for actively participating in this session. So with that, I'll hand over the time to Yamamura-san for his closing remark.
So I truly appreciate it because today we have many questions. That means many of you are very interested in DHLT and Japan, maybe in daiwa house. Then again, our property is very unique. The mix of Japan and ASEAN logistics properties. Then our strategy is a mix Japanese stable asset and growth of the ASEAN countries. Then we will focus on the growth of DHLT itself, collaborating with the sponsor. Again, thank you for your interest in DHLT, and hopefully see you in the next opportunity. Thank you.
Okay, thank you everyone once again for joining us today. Have a great day ahead. Thank you very much. Bye-bye.
Thank you.